Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is March 25th, 2019, and we're going to take a look at corn tonight. The ETF is CORN for those that want to trade ETFs. What's basically taking place is we have the trends all point to the downside. In fact, just kind of an oddity, I just want to point this out. Anytime all of the trends, short, intermediate, and long term, are all pointing in the same direction, whether they're all up or all down, you'll have a blank here. If there's something that is askew, where one might be up and two might be down, you're going to get something that is a mixed trend with the little asterisks. Just look at this. You can see that not all, but the vast majority of the markets, with the exception of Canadian dollar, Australian, and sugar, all of the major markets that at least we track are all pointing in a trending direction. So just a little bit of an oddity. The trend in general for corn is still to the downside, and it's being backed up in this particular case by the technical rating. Now, what's kind of interesting here is we have a tight support resistance level that popped up here today, and there's reason for that, and I'll point this out. But before we get to the support and resistance, I just want to pull out the patterns. Here's the Deep Dive Pro patterns, and for corn, we had a profit taking. That's what this column represents. These three columns represent profit taking. The next four are reversals, and the final four are environmental changes. But for tonight, what I'm just going to do is I'm just going to talk about corn here. Same thing's happening with wheat, by the way, but we have a high. 0 represents today's action to 0 trading days. 1 would represent the previous trading day, and 2 trading days again. They're not calendar days, these are trading days. In any event, we had a profit-taking high that triggered here today, and so we want to take a closer look at that particular market to see whether or not there's going to be some type of a reversal. Now, I'll also point this out that all of these deep dives, whether on the daily or the weeklies, we also back up everything with statistics. So I'll show you where you find this. You go to Signal, Deep Dive, and you come down to the Pro Alert Performance, and then since we're talking about a flow high, which is what I just pointed out with corn, here's that particular chart. You could pull up any of these charts, but here's the flow high, and corn, lo and behold, is at the top of that list. And what that means is that on performance metric, we use profit factor. The average is a little over 2, which is pretty darn good. Right now, corn, heating oil, 5-year notes, wheat, they're all very, very high. The higher the number, the better its performance metric is, the better its risk reward metric is. I won't go into going into all of the math behind it. Suffice to say that when you see any of these indicators that you want to check out their performance, if they're up there high in the list, even some of the lower ones like soy meal, they're still above 1. That's the key. But in that particular case, those that are at the top of the list, those are something you should really take note of. So the fact is that, and I'll just come back to the alert here, we had a high, it's a flow high, and it's triggered today. So that means that if it's a high, you're expecting the market to reverse, or as a minimum, since it's in the first 3 columns, take some profits while you're able. So just want to sort of point that out. Now let's look a little bit more at the analyses here. And here is corn. The little diamond represents today's action, and these blue bars represent resistance above the market, and the red levels are support to the market. And what we're always looking for is how strong or weak are these support and resistance levels. So the strength, in this case resistance at 381, and you can use this for any market. What you're really looking at is what is the number, in this case corn, it's quoted at 381 is the price level that has a strength, S for strength, 109. So that's a high number. The higher the number, the stronger the resistance. The C represents count. There are 3 resistance levels in that vicinity that are pointing to the fact that this is pretty strong. So strength down here at the bottom, and C for count. So if we're able to break above the 382.25 level, which is weaker, then you see that there's a bit of a gap there. It's like a warm knife through butter. It should easily go up to that level. On the flip side, we have a flow high that is just triggered. We've got some resistance to the market right through here, but we're always going to have some type of a support. So kind of a similar type nature. Strength of 152, very strong. Count of 5, very strong. And then it's a little bit weaker just below that. So if we're able to fall below 375, there's a big gap here where the market should fall very quickly should it break through those levels. So anytime you're looking at the targets, you're kind of looking at two things. One, are there gaps that are up there? And where is the major support and resistance? So in this particular case, the 377.20, that is very strong. And then everything below that, there are points of reference, that we should be looking at. But for all intents and purposes, they're all fairly weak with the strength in their counts. On the upside here, if we should break above the 381, weak, but not super weak, but 382.25, we should go up and find some resistance at 386 because it's fairly strong with a strength of 170 and a count of 5. So there's enough resistance to the market. It's fairly strong right in front of us and a little bit further away. On the support side, we have a little bit of support to the market. After that, it could fall fairly quickly. So it bodes well for that flow high, that profit taking. Not a reversal, but it is an indication that the market may have gotten ahead of itself and is likely to do some type of reversal. So what's this mean for us? Well, we always want to check the systems. That is the core emphasis of what we do. We got corn short. That bodes pretty well for us. Got a nice little open position profit of almost 13,000 on the short position. As far as it's been trading. Soybeans, not so much. It's short. It's got a small loss. We live in the realm of reality here. Nothing is perfect. And for ourselves, wheat right now is on the long side. Now remember, it had a flow high as well, so we might see some reversals that start triggering in wheat as well. The systems will dictate everything. The analyses, the support and resistance, the flow high, the trend to the market, those are analytics. They're just giving us a flavor for where the market is. The systems funnel all of that information into some actionable item. Are we long? Are we short? Are we aggressively long? Are we aggressively short? Whatever the case may be. So in this particular case, we're only short one in soybeans and long one. So not overly aggressive, but they are taking advantage of whatever the market is throwing at it. So we got nice open position profits in two, and we might very well see soybeans start to kick into gear here. So with that, just watch your corn position very carefully. The upshot of this is that you might want to take a little bit of profits on the long side and anticipate that the market could have some type of a reversal and fall back into flow. No pun intended there, but back into the flow of what the overall trend is all about. So with that, we will take a look at another market tomorrow. And I do want to point out, if I can do this really, really quickly, if you come to membership, upcoming webinars, I'm going to be doing a webinar on Wednesday. Today is Monday, obviously. On Monday, and we're going to be doing something on the deep dive analytics, just kind of going through all of the metrics on some of these pages that I'm always talking about. It might help to get a better gauge as to some of my terminology, what does it represent, how does some of the analytics work together, and so you can just simply register if you choose to for the upcoming workshop, which is going to be on the 27th at 11 a.m. Eastern Standard Time. So with that, thank you very much, and we will take a look at another market very soon.